What's up, YouTube? Listen, family, today I want to take you under the hood of my portfolio and demonstrate as well as show you guys proper risk management and what it actually looks like, okay? I know that's one of the things I preach, but I think it's one thing to say it and tell it to you guys, but it's another thing to kind of show you just how it's done properly, okay? Also, we got a jam-packed video that's full of jewels for today, so keep it locked. Make sure you like and subscribe if you haven't already. Let's go ahead and dive into it. Okay, guys, I'm taking you guys under the hood of one of my best paying dividend stocks, okay? This is Capital Southwest, ticker symbol CSWC. Okay, I want you guys to follow along, take notes on this, because this is how to properly manage your risk. This is what I'm going to be teaching about for this first portion of this video, okay? Currently, this stock is sitting at $17.55, okay? Now, what I care about, let me just let you guys see my holdings, okay? You guys know I try to get 125 shares minimum of everything, and then I let the dividends and the payouts reinvest and just continue to buy more shares as they pay out the dividend, okay? So check this out, okay? Take a good look at this. I'm taking you guys under the hood, and I do this for all of my stocks, okay? Especially in a bear market. Now watch this. Look at this right here. Let's go through this together. At the beginning of the year, the first day of the year of 2023 was January 3rd. We couldn't trade no other day than that, okay? And this is what I want to show you guys. Let's go through this, okay? Check this out. I have 372 shares that will be stopped out if this stock ever falls to $17.12. Okay, now because I know this stock can run up to $20, $25, regardless if it does, because we're in a market that's going down, I'm going to protect myself to the downside, okay? This is how you properly manage your risk, maintain your portfolio value so you're not going down, and then you still will collect a dividend. Watch this. Long as you are holding or within the stock, by the time the ex-dividend date comes around, you'll get the dividend payout, okay? But also, guys, if this ever hits 1712, all I'm gonna do is have, let's see, I'll get the $6,500 returned back to me, okay, give or take a little bit. Then I'll just rebuy the same stock at a lower price, okay, managing my risk, maintaining my overall value by all intents and purposes, okay? You might be down $12 or something like that, okay? But then this is how we do this and continuously take our portfolio to 50K, 75K, 100K a year. Watch this, guys. On the day, this was up 1.4%. On the week, this is up 3.7%. But watch this. On the year, this was down 31%. This is what I'm trying to teach you guys. There will be people that will say, your plays are down, not me, but I'm just saying in general. Oh, stocks are down this year, yada, whatever. All your plays are down. No, no, no. If you guys been with me any amount of time, I am big on utilizing the stop loss, okay? I always have my stop loss set for all my plays. Today's example is just Capital Southwest, okay? We put these on at the beginning of the year or at critical juncture points of the year, of the market cycle, things like that, so that you protect yourself to the downside. Guys, I can tell you this, I'm never going down 31.28% in Capital Southwest, let alone any other play. Okay, so look, the low is way down here at 1680. Okay, I'll be buying that level because I'll be out by 1712, and if it comes to 1680 or 1650 or lower, because they said by all accounts from the experts on Wall Street that this year is supposed to be worse than 2022, and whether that happens or not, I don't care, because I'm managing my risk regardless, okay? This is proper risk management as it relates to your holdings, all right? And so if we don't have a year that is worse than 2022, okay, cool. I'm gonna ride my plays up like I always do. However, when we have sell-offs, when we have anything of that nature, my stop loss are always in place to make sure I'm not going down 31%. If anything, guys, I'm either breaking even or I'm getting out with a small loss or right where I initially bought at. Okay, does that make sense? And so I wanted to show you guys that. Another play I wanted to share the same thing with you. This is Altria Group. Okay, this one replaced my BGS dividend stock. The same example, guys, just so you can see consistently throughout my portfolio, whether it's Apple, whether it's any stock you guys know we own or we hold, we do the same thing. Look at this. For Altria, 109 shares are on the chopping block if this stock ever falls to 45.05. This stock is currently sitting at $45.40. Okay, now it very seldom, if at all, comes down that low. But however, if it runs, we're in it for the run up. If it doesn't run or if it gets sold off, this is how you protect and manage your risk. Okay, we're not taking losses, and so I want to show you guys this, but I want you guys to emulate someone that can show you the real. Okay, we not just talking. I want you guys to go through your portfolio at the top of the year and make sure you have stop loss set on any stocks that you own that you can still do this with, so that when the market sells off, because it will, okay, they may try to push it down to lower levels this year, okay, that's fine. All right, we won't be down in those plays. If we still like the stock, we'll just rebuy them. Once we kick out and get our money back, we'll just rebuy them at a lower price and ride them back up to these current levels. Okay, that is proper risk management. Today, guys, our word of the day is EBITDA. Okay, spelled EBITDA. When you guys see this, I want you to understand what this is. A quick definition is earnings before interest, taxes, depreciation, and amortization. Okay, a company's earning before taxes, interest, depreciation, and amortization is a measure of a company's profitability of operating business only, thus before any effects of indebtedness, state mandated payments, and costs required to maintain its asset base. Okay, so you need to understand EBITDA when you see that. Okay, that's how we say that word. So I'm putting this back on you guys' radar, meaning the stock lingo, because you're going to hear Wall Street and you're going to hear the analysts speak like this, but you need to know what it means. You need to know what it entails. Speaking about what it entails, let me teach you guys and show you guys a balance sheet, and eventually I'm going to show you how to properly read a balance sheet, assess what a good one looks like versus what a horrible one looks like, and how it can serve as your cue to stay away from certain stocks and to buy certain stocks. Right here, guys, this is a balance sheet for Tesla. Okay, their current assets, the total is 74.4 billion. Their current assets is 36 billion. Okay, you have everything from cash and short-term investments, receivables, you have long-term investments, you have intangibles, so on and so forth. Now look at this, guys. This is a breakdown in just in a pie chart fashion, okay, of the allocation, okay, of where the majority of the assets lie. Okay, you might want to make sure yourself is very familiar with, if you're going to be invested in a company, that their balance sheets look different. Look at total liabilities. 34.6 billion. Okay, and their assets was 74 billion, so that's 40 billion above where they need to be. Okay, so all is well in that regard. Okay, in terms of assets versus liabilities. Really quickly, just wanted to put that on you guys as we make sure we go into this next phase of this portfolio. Bringing out the charts, guys, we have the SPY pulled up. This was ticker symbol SPY. As you can see, really quickly, guys, we made a double top, okay, to close out the year, okay, and that double top level was 410. Okay, 410 was the highest we were able to get to for the latter part of 2022, and then soon as we hit that level, we crashed down. Okay, so they made it through the resistance level, that 200 EMA. They got through that. You see that's currently sitting at 398.70 right now, but that was around 410 some weeks back. Okay, but check this out. Now we are currently just trading sideways. Look at this box I have drawn out here, and I drew this box around it just to kind of show you, don't get caught up by Wall Street games of making the stock market really go literally nowhere. Okay, they're just doing a bunch of jucking and jiving, but the stock is remaining in the same place, and we call this sideways chop. Okay, now there's ways to take advantage of it, because on a more drilled down basis, maybe your 1 minute chart, your 2 minute chart, your 5 minute chart, you can really see some opportunities in there. But at the end of the day, it's going to the same level, 384 to 378. Okay, it's just range bound, and it's been that way for the last 30 days. Okay, so I just want to put this on you guys so you can have a 50,000 foot view of what's going on currently in the stock market. Although we have some action, we really aren't doing much of anything. Okay, but just been in a sideways chop. What you want to do when you see sideways chop on any time frame, 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, whatever, you need to wait for a breakout. Okay, you need to wait for a break in either direction. Okay, you don't want to front run chop, because if you guess wrong, then guys, it wipes you out. Okay, so this is again where patience comes in at, and where you'll hear me stress to you guys, hey, be patient. Don't be greedy. Don't rush the process. Let the market dictate for you what it's going to do. Okay, yep, you can have your inclination, but even if you are right, you still need to wait, because you might say, Chris, this is making a bear flag, this is going to break to the downside. You probably 100% right. However, before it breaks to the downside, it may have a move so violently to the upside that it kills your put if you were trying to front run it. Okay, so be patient, be surgical in this game, and more importantly, manage your risk. Listen guys, I hope today's video was filled with value for you all. Please like and subscribe if it was. Join us on the journey this year. I want to make sure I show you through investing as well as trading how to dominate the stock market. Okay, listen, we make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. So do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.